What's going on, y'all? Hope all is well. Another episode of Combos with your CFP Mario Payne in beautiful Florida. It's not raining anymore, man. We had like 7 or 8 days of rain, rain, go away, come back another day. It does help the grass, though. I know one thing, though, with skittish. Skittish, what's going to happen? The market is amazing right now, right? Having a great year so far, up by over 10%. The NASDAQ up way more than that. So I was having a conversation with a client today, going over what to do for the second part of the year. Before we get started, as always, though, like, subscribe, share to our channel as we try to get 1,000 subs. I have more clients than I have subs, but having 1,100 clients worldwide, extremely blessed. I've been practicing for 16 years, been a certified financial planner for 11 years. Of course, we have our own ETF on the market, LETB, Let Be, the first Black-owned AI-powered, fully AI-powered ETF on the market, which is pretty cool. And of course, our investment app, Let Bob, as we keep on rocking and rolling. However, though, when it comes to rocking and rolling, as I said, the market has been amazing. So as I had a conversation with a client, the thought process was, should I pocket some gains? Should I invest more? What should I do for the second part of the year? And what happens in the summertime? Do people invest more? Are people on vacation? So the retail investors are pumping money in, but the institutional investors aren't really investing. So I wanted to kind of go over a month-to-month standpoint what the market has done historically, because nobody knows the future but God. So we can historically say what the market has done month to month. And also from a recommendation standpoint, in totality, not just for you, but just in general, what are some things you can do in the second quarter of this year to make sure we continue to get to the bag? But first, what's going on month to month with the market? What are the average stock returns by month? Now, this was published October 2019, so 4 years later. Now, October 2019, Mr. Chris Gennars did not know COVID was coming in 2020 and did not know hyperinflation was coming in 2022. So, of course, these numbers are skewed, but it does give us a historical reference because it was from 1980 to 2000. Right? So, as you see, from 1980 to 2018, April has been the best month for the year, average of 1.52%. And we all know April was good. May this year, better. However, September has been the worst with an average return of minus 0.7%. So we go from 1980 to 2019, right? January, up. February, Valentine's Day, up. March, up as well, right? Okay. Wedding season in March or baby season in March. I was born in March because people get married in June. 9 months, y'all do the math. April, 1.51%, which is the highest. May, this May of this year, very, very good. June, we're in June now. It's kind of flat. July, good. But then we have August and September that kind of drive down the market to the latter part of the year. So it's two trains of thought, right? Number one, should I pocket my gains? Well, it depends. If you're a long-term investor, short-term investor, or a trader. If you're a trader, then yes, you probably want to get out. Not a recommendation, just a conversation. Because if the market is going to go down and you're really not worried about long-term profits, then you want to pocket your gains. If you've been in investments that have been growing like wildfire over this year, then yes, you want to pocket your gains as a trader. But just know, if the market continues to go up, yes, you made a profit if you've been in something for a long time, but you're also buying something at a higher price. So just food for thought. As an investor, I consider myself investors. My clients are investors. We don't do trading. 85% of day traders lose money. So, we look at ourselves as investors, as we long term. We want to invest for 3, 5, 10 years and beyond. As a long-term investor, we want to stay invested. Now, if it's something that's just went to the moon, like a Tesla, for instance, or NVIDIA, then yes, maybe taking some profits may not be a bad idea. But you got to, from a risk standpoint, think about it, right? If we get out of NVIDIA and get into something else in the same investment class, what if that doesn't grow as much? we shoot ourselves in the foot per se. From a tax standpoint, what's your tax liability? If it's a short-term gain where you held that investment for less than 1 year, then you're taxed at your income, not at the capital gains of 15%. So that's something to think about. Also, from a DCA standpoint, dollar cost average. If the market does go down in August, like it historically does, if it does go down in September, as a long-term investor, don't I want to buy low? If I continue to put money in on a month-to-month basis, if I'm buying low and prayerfully selling high, aren't I happy with that? So as a long-term investor, yes, you might want to think about taking some profits. That's why you talk to your local certified financial planner. Go to www.cfp.net and find one local, or you can talk to me as your certified financial planner on the internet and in person as well, or via Zoom unless you're in Florida. But you might want to think about dollar cost averaging. If it's that stock that's ran wild, you might want to wait till it goes back down, right? And then maybe buy it at a lower price if the market does correct itself, but would not recommend a person getting out the market altogether. Yes, it's going to go down, but as a long-term investor, historically, it does go up over time, as we can see. So the average is 0.67% because in October, it gets better. November and December, that is the Santa Claus rally, where the market gets propped up and makes a nice amount of money at the end of the year. So an average of 0.67%, that's why the market averages over 8% a year. So, food for thought. Are we going to get out the market? Up to you. You want to be diversified though. You want to think about taxes as well before you make any moves. Will the market go up another 10% like it has so far this year? We don't know. If the Fed pauses rates like they have done so far, we might get a boost from a tech standpoint. If the Fed raises rates, we might want to look at those safer type of investments that did good in 2021 that's tied to the Dow. 2022. That's tied to the Dow that might help us, but who knows? Not a recommendation, just a conversation. Hope that helps though, you guys. What we gonna do? We in the market, we investing more, or we pocketing our gains and staying away? I know one thing, long-term investing is always the wave. Let's make some painful profits together, y'all. Peace.
And you just wanna get paid, tired of making the money mistakes. Make a payment on your bills and you still late, yeah. Painful profits to help you seek change, and you just wanna get paid, yeah. Tired of making the money mistakes. Make a payment on your bills and you still late, Painful profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you know, and it could be different, you know.